Okay, Porinju Veliyath is joining us right now on the show. Needs no introduction. He's got some fan following on television and on social media, I can tell you that. Porinju, thank you very much for coming back on. Great to have you with us here. You know, I don't know if you were joking with me or you were serious in the morning. You're saying that whenever I invite you for a show on the channel, the market heads south.
I have always noticed that. Last time also same thing happened.
So, I know. So, how are you dealing with this volatility, this crack, and what's your overall perspective?
The best way to do at this situation, not to deal with that. When you try to deal with that situation, it's a problem. And see from an investor perspective. But as you know, it's mostly trading and a lot of intraday traders, short-term investors. That's the community which is dominating in the stock markets. So there is a problem. A lot of people losing money. Somebody was telling me, he lost money in the last couple of weeks. Whatever he made in the last 5 years. So it's very scary kind of statement people make. That's basically it shows the kind of leverage people do. When the markets are good, when the markets are on an upswing, things are looking bright, the television channel stocks very good, people get carried away. So they want to make, the greed is always there for every human being. But some people can't control that. They're going over leveraging, taking too much positions. I know people, buy shares worth 2 crores with a capital of 10 lakhs. And the broking firms and, the systems allow that. So that's where the big hit is taken, and I think this time it has been very rampant in the market. Even though the fall in the market was not very big, I think this was just correction of the markets in India. So I think there is nothing much to worry about the market from these levels. Markets can remain here. I'm not very bullish on the Sensex and Nifty, and one reason for that, the weightage of banking stocks in the Nifty and Sensex. I have not been very comfortable on that. We didn't invest in banking stocks for last 6-7 years under PMS.
Purinju, in a very uncharacteristic tweet, I don't remember the exact level. You put out a level saying, well, which the Nifty, I think, touched and then bounced from there. This was, I think, a few weeks back, and you said, well, that was the Nifty low forever, or something like that. You had tweeted. I don't remember the level now. It was uncharacteristic of you because you otherwise usually ignore what the broader market is doing.
This I made,
Yeah.
earlier when the Nifty came down below 8,000 and, people were panicking. Prashant, I have no business to do with Nifty. I'm not a technical analyst also. I don't believe much in that. But sometimes, to give a confidence to people, to give a clearer picture, I have to use the word Nifty. And what I told, later, that could be the low for the decades to. Actually, Nifty is below that today at this point of time. That doesn't really mean anything. It's Nifty here and there. That doesn't change the long-term trend of Indian equity market. I've been very bullish on the markets. I continue to be bullish, but doesn't mean that you go and get a higher index every month for a long period of time and see corrections, the deep corrections what we have seen in Indian markets.
Purinju, let me repeat my earlier question. It was about a market level that you had tweeted saying that it's unlikely to be taken out. I think we are below that level. The question broadly is there any point in trying to pick the bottom? I know that's not what you were trying to do. But how would you, because most of the time we hear about the importance of this level or that level on the index, on the Nifty. How should one use this?
Yeah. Basically, I'm not a Nifty fan. I'm not an expert in technical analysis. And, see, I use the term Nifty basically sometimes to give some, kind of direction to the market for the normal people, that's what the language they understand. So this, when I say, when it was below 8,000, the Nifty last time, so there was a lot of panic I was watching, and I never thought this panic is worth it. So what I was telling, this is, don't look at 8,000 or it's 7,900. In fact, Prashant, I'm looking at 10,000 for the Nifty bottom. It may take some time. People are now, whether it is 7,000, 7,200, 7,500, that's the kind of talk going on. And this talk will continue to go on till the market makes a real bounce. You'll see many positives happening. And now let us get the macro picture. See, the global slowdown is real. It is truly happening. But it is nothing to do with the last 2 weeks kind of thing. Then people talk about China slowdown. So whether the China slowdown is due to the global slowdown, I don't know. See, the global slowdown is real, and this happens often in the history. In the future also this will happen. This is basically an adjustment in the economies around the world when there is more supply of goods and services than the demand by the population. So these adjustments happen. So we call it global slowdown. Many of the manufacturing companies have to cut the productions, then only it will balance. Many commodities being produced, including crude oil or whatever, they have to get adjusted in the global supply chain. So this is what we call the global slowdown. And this is not a horror. I had once tweeted, this thing happens. It can happen every 10 years, every 15 years. And sometimes it is very mild. It recovers very fast. Sometimes it can take few years to recover back. So let us have that macro picture and where India stands today. That's more important for an Indian investor. If you try to monkey jump with the Chinese indexes and the US markets and you use what do you call the payroll data or the Chinese.
Okay, I think so. The point Porinju is making essentially is that what remains relevant and in a way what remains sort of within the ambit of something that you can cover is our Indian macros and not global macros that much. Both, he was talking about US, he was talking about China and other big markets as well. It's kind of tough to do and in many ways futile as well. So his point was focusing on what's happening in India and whether things here are getting better or are getting worse. I think Porinju is back with us. Porinju, I was kind of paraphrasing what you were saying, but go on, finish that point.
The Indian investor today has to look beyond all these Chinese data and Chinese slowdown or Chinese stock market volatility. No, there it is happening almost like a mock trading on Saturdays in India. Sometimes it happens. NSE and BSE, for making the system tested, they make mock trading. So people can buy, sell anything at any price. So Nifty can go down up by 5-10%. So this is happening almost every day in China. Actually, the market between India and China, there is a huge difference. Please understand, India as a country, as an economy, as an equity market, we are very, very different from China. India looks most stable at this point of time, from an economy perspective, from our banking and financial system perspective, from our stock market and its regulation perspective, and the country as such, and how this stability happened to India because of our conservatism. The conservatism in India, it doesn't just start with the government. It starts with individuals, the families, the communities, the Indian institutions, like SEBI, RBI and kind of institutions, and the government. We are basically a conservative community. We don't spend money beyond our income. This is generally I'm talking. Some people in some communities, they are doing it. They have 5-6 credit cards. So they are trying to become like an average American. But it is only very, I would say it's very exemptions. Otherwise, India as a community, as an economy, as a market, we are very stable. So we need not monkey jump with the Chinese stock market and the Chinese developments. So that is the basic thing I want to convey to Indian investors.
Okay, fair enough. Now, one more question: does the fact that you said that market volatility should continue and maybe things aren't looking very good in the near term, right? I think you said that. So say the Nifty goes down another 400-500 points from here. Does that, and if you believe that somehow that is the way it's going to pan out, the market has got more downside. Is that view? Will that affect your purchase of what you consider attractive stocks? Will you wait for the market view to pan out before you start purchasing stocks that you otherwise like, or no?
Yeah, Prashant, now Nifty, if it goes down by another 400 500 points, I won't be surprised because we have seen much crazier markets the way the markets went down by 50%, Nifty and Sensex in 2008 period. We all remember that. It's not that far away. Few years ago it happened in this country, globally. So markets can be irrational. It can behave very stupidly. So we have seen all these things, and I'm telling you, this can happen because of the over-leveraged trading in the markets. That simply makes it more attractive. And this time there is one good, another very important aspect in Indian markets. See, a lot of people among the public, they feel missed out the opportunity for equity investing in this country. They saw, especially the mid caps and larger mid caps going up by 2 times, 5 times, and 10 times in last 1-2 years, starting with 2013. So maybe this is an opportunity for those people who missed to invest in Indian equities for long-term wealth creation. This is nothing but an opportunity, in my opinion. And we are, as I told you, we are different. Our markets are headed for north.
Okay, fair enough. Fair enough. Now, let's get to some ideas from you, Porinju. Ideas that you are working on currently, that you may have bought recently, that you're thinking of buying. I guess you'd want to save those for to discuss after you've actually bought them. But why don't you run us, our viewers, through some ideas? Yes.
So I was in fact going through some of the industry leaders in this country. When markets are panicking, traders sell off their compulsorily they square off their bull positions. You get great values in the market. Maybe it's the time to I used to, if you remember, I have talked earlier. I love bad stocks. I love stocks with not so great management by perception. But I'm telling you now, maybe you are going to get some great stocks which has good quality, good earnings, and good visibility, management, balance sheet, and at reasonable valuation. So I was, in fact, recently some other platforms I have mentioned about, some industry leaders in this country, which can take part going forward, because we are going to, the government, the way government is projecting India for next 5 years, there are definitely some segments of this economy is going to really shoot up, going to be very impressive growth. So which companies are placed well to take advantage of that growth? I would say one in logistics is the Transport Corporation of India. This is an idea which I have been talking, and the stock has been coming down. And why I'm talking this stock, because I told on television the stock is not going to go up. There is tremendous supply. There is some large investors selling, but around 230, 40 or whatever is the price. At something like 1,600, 700 crores market capitalization. You are getting a huge company, the leader company in integrated logistics in India. The kind of assets this company own, productive assets for doing the business, like they own 1,400 offices. They own, they have put around 1.1 crore square feet of warehousing space in this country, thousands of trucks, 13,000 offices across 200 countries. So these things are developed over a period of 4 or 5 decades, and it has got a great value today. But at the same time, I feel this company was not very dynamically managed. So there is a problem with the margins till now, which I'm foreseeing. These margins of the business can improve in a better operating environment going forward. So these are the kind of this stock can be acquired with a 5-year perspective or 3-year perspective, because the macro level industry is giving an opportunity. This company has its own huge asset-based, relevant to the business assets. So I think there are such kind of leaders in this country. I was earlier talking about Tata Global Beverages. The price is something like 120 or 18. I don't know the price today. So FMCG company, 90% branded products available at 0.8 times the sales. This happens. This is like a bear market price, and we are in a bull market. Remember. So, this is not a commodity company. They have got great brands. They have consolidated the water business also with it. The tea, coffee, health drinks, water, and they are going global. And the Starbucks tie-up, which can really grow in the next 5 years. And all these are available at around 7,000 crores value. and the company already has 8,000 crores plus kind of a revenue. So it is quoting below commodity business. Why? I don't know. I have no answer for that. Maybe anybody invested in this stock last 2 years or 3 years, 5 years ago, they are not happy. The stock did not perform. That doesn't mean the stock will not perform next 5 years. I think this company is at an inflection point. I'm talking about Tata Global Beverages. It can create a lot of wealth in the next 3 and 5 years' time. You
Okay,
want more ideas?
Transport Corporation of India, Tata Global Beverages, always more ideas. Porinju, that's not even a question.
Now, here, one thing, people, I have seen one, I talked about it in the last interview, some unhealthy trend. People are always liking the famous stocks, the fancied companies, especially bought by some fancied investors or operators. I think that it's a wrong time for doing such things. Markets, a lot of stocks have gone up manifold, and this is the time for stock picking. Casual investing can be very dangerous at this point of time, because there can be still excesses in many stocks. I have tweeted some 3-4 weeks ago. I was warning the valuation gap is narrowing down. It's going to be tough to make money in the mid caps generally. Actually, that was a peak of I think 2-3 weeks ago. That was like a peak for the mid cap stocks. Not that many people say Porinju is always bullish. He never talks bearish or never wants. I can't help it because I feel so. Not just being a patriot, even looking at the economy and the potential for Indian economy to grow, especially considering the demographic structure of this country.
Porinju, just one thing. If you look at a lot of the fancied, expensive stocks, which you've tweeted about, we've spoken about that in our last interaction as well. Right? I mean, the 40-50 times plus P type of names. Take Pfizer, Amar Raja, Aisha, Page Industries, BEML, Ashok Leyland, Britannia. So these are all expensive, right? 40 times, 50 times trailing PE, right? But take a look at what these stocks did in the last week when the market faced the maximum correction. They all sold off. And then they all came back. They're all holding on to decent, I mean, actually, most of their gains. They're actually quite okay.
Yeah, it's a mistake. Yeah. People are still chasing them. See, what I'm telling you is
if you own them, no, if you're saying if you own them already, you bought it at a good price, then don't chase them. That's what you're saying. You don't need to sell them if you own them, but don't chase it higher.
Let us put it in simple terms, Prashant. See, we talk about safety, margin of safety in value investing. There is a margin of safety aspect, and then people talk about the moat. Okay, it's the special environment for the company, competitive advantage, whatever. So there is a moat, there is a margin of safety. You cannot ignore margin of safety because there is a moat. Am I right?
Absolutely.
Yeah. So what people have done the mistakes in the recent past, especially the newcomers to the market, it's very sad. They are first time coming and buying a Page or a Kitex at 1,000 rupees. I think that is not the way to buy Indian stocks. We have a lot of them here. It's not like we have that 40-50 companies in this country in the mid caps. So the moat should be applied, but very importantly, without forgetting the margin of safety. Basically the price earning multiples and its growth rate for the future.
Okay, fair enough. So don't ignore margin of safety, very important concept to be applied because of just because a company has strong moat. I mean, the price that you pay, the initial investment price is very important. That will eventually, obviously, will have an important bearing on the overall returns, right? A very simple concept that. Let's just talk about a couple of other ideas. HSIL, Porinju, is something that you like?
Yeah, it's a beautiful company at this valuation. It went up to some 450 kind of levels last year. In fact, we had this stock in our portfolio management at 80, 90, 100 rupees we had bought. We exited at 250. Unfortunately, it went to 450 after a few months. Now it has come to something like 230, 40 kind of prices. I think it's a leader. Again, it's another leader in the industry in India, the sanitary ware. Plus, they have got a very big division for the glass containers, which is, I believe, is a futuristic business. And that division has been making losses last many years. Now I think it has almost broken even. And this can be profitable going forward. So at current valuation of 230-40 rupees per share, I think Hindustan Sanitary Ware is another company I would ask investors to watch for. Need not rush to buy it today or tomorrow. These are the companies for next 5 years, And please remember, all these stocks, what I am talking, we are holding it in our portfolio management. These are the recent buying in our stocks, For example, TCI I bought after selling Share Shipping. Share Shipping I was buying at 80, 70, 80 crores market cap. I sold it when it came to near 2000 crores valuation very recently. And we shifted to TCI almost at the same kind of evaluation. TCI is a much bigger, larger company, and they also have a small mini shares inside the company. It is into every aspect of logistics.
Yeah, yeah. Fair enough. Now, let's get to real estate stocks, which you have spoken about in the past, where you think, I think you spoke about DLF, and you kind of sort of categorized it under the heads of businesses where there is perceived poor management, which can get better, right? And there are other reasons as well, which for reasons because of which you were bullish on stocks like DLF and Anantraj. Still holding that view?
Yeah, I still believe these companies are underpriced significantly. Now, DLF had many controversies connected with politics. Anandraj is like a mini DLF. It's at around 800, 900 crores valuation today. It's a great company. They have created assets not only as land bank. They have got ready to occupy premium, around 5 million square feet, over 5 million square feet of ready to occupy kind of, premium commercial space. And they started giving it on rental around 30-40% already occupied. It's a company which has come down, now I think it's a 10-year low. After I suggested in your channel, it has come down by 20-30%. But I feel we are holding the stock in our portfolio management. Even personally, I am holding it. I love the stock at this level of 31 rupees, at around 800-900 crores valuation. DLF, it has not gone down beyond below the price I told. I have suggested the stock at 110 levels only. These companies, once the sentiment changes a bit, in the market, I think they can go even multi-baggers. Today, every aspect, fundamental, the business environment is very bad, too much inventories. I can give you 100 reasons not to buy these stocks. But there is one good reason to buy them. They're great values, looking at the price.
Okay, no, fair enough, fair enough. Porinju, I remember one of my earlier conversations with S. Narain, who's the CIO at ICICI, and he also is a staunch value investor. So I asked him, I remember this is a couple of months back, I asked him what is a very simple way that people can identify market extremes. And he picked up an example from the tech bubble, when he gave the example that the combined market cap of a sector, all the listed companies in a sector, is less than the market cap of a company in a fancied sector of that time. That comparison, I think, today can be made for the metals and mining space. And you can, on the fancy side, I think you can take a pharma stock. You think there is any value at all? And I was also looking at at what percentage of the current prices, current market cap, can just be accounted on due to the cash on these stocks books. Nalco 70% cash, Moil 80%, Hindustan Zinc, lots of these names.
Yeah, but of course one has to be selective. And the one important parameters, if somebody is looking at the metal space, I would tell you whether the surety of the survival of these companies. Sometimes see what market people, what normal casual people, how do they invest? When the aluminum price is high, they buy Vedanta at 300 rupees. And when aluminum price is low, they sell it at 80 rupees. How can people make money doing that? So there is a big principle in that, And people buy Hindalco at 200 when the aluminum is high. Aluminum is low, they sell it at 80 rupees, 90 rupees. And they are panicking at that price. And they are panicking to buy at 200 rupees Hindalco when things are good. So one should be having more wisdom. These things, when the industry is bad, you sell the stock. When the industry is good, you buy the stock. That doesn't work in the stock market. That is why people lose money.
Okay, so you're saying for metals and mining, you don't have a problem with that, but you should ensure the survivability. Do you think there is a survivability issue in the space? There are some companies which will eventually go bust there? And
I feel
we're not going down the market cap list. I'm just talking about the large ones. I mean, Nalco 80% government holding. Hindustan Zinc, I think 70 odd percent is now owned by Vedanta. I'm talking about what? I mean, take Tata Steel or SAIL, for example. Those kind of names. Moil.
yeah, yeah. I would just tell about Nalco, National Aluminium. This is a stock we had many years ago in PMS and we booked profit. So Nalco is a company you won't believe. Today the enterprise value is around 5,000 crores. You can own this company for 5,000 crores. And it's a fully integrated, they are one of the best bauxite mines, the richest bauxite mines in the world. And they are in the best positioned. Even however you mismanage this company, it will become profitable. That's the kind of fundamentals for this company. And you can own the company today at today's market price just at the cost of their 1,200 megawatt power project. Forget all the mines, its smelter, its refinery, and huge other assets. The company is priced today at the cost of its 1,200 megawatt power project. That is because one reason could be it's a PSU company. Traditionally people have been always scared about investing in public sector companies because of the uncertainty about how it will be managed in the future. But now Hindalco, Vedanta, they all are big companies. Now Hindalco, I feel sometimes, even though it's coming from a blue chip group, Birlas, it's a bit over leveraged. So, but nobody can think about, survival, the problem in the survival of this company. But I'm still lacking clarity on that regard. They have gone acquiring global companies and it's a very big, too big company. Sometimes in the industry, if it remains 2-3 years very bad, the size also can create problems, especially in an environment of over leveraging.
Okay, fair enough, fair enough. We'll leave it there, Porinju. It's been a great discussion. I enjoyed it. Viewers, I'm sure, enjoyed it. Thank you for coming on.